You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-interesting, ever-compelling, and ever-fun Options Insider Radio Network. If you haven't had a chance to check out all of our latest shows, including Trading Tech Talk, I encourage you to do so. If you're reading all that Flash Boy stuff and you're saying, hey, what does this really mean for me? Check out that show. I think you're going to like it. And while you're there, of course, surf on over to the App Store, iOS App Store, Google Play App Store, Amazon App Store, and download our fun, exciting mobile app. You can stream all your favorite episodes of every program. You can download them for offline listening. And, of course, you can hit that feedback, that question, that comment button right there. You don't like what Uncle Mike is saying on the show right now? Hit that button. Let him know. So take advantage of that app, the Options Insider Radio Network mobile app in your App Store of choice. All right, and joining me on the show today, speaking of Uncle Mike, since I gave him a hard time in the intro here, we might as well give him pride of place. We are joined by none other than good old Uncle Mike Tusaw from RCM Wealth Advisors and RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Hey, if someone wants to say that I'm sound bad, I'm fine with that. I can take the good with the bad.
I'm glad you can take some time out of your busy schedule to be with us today, especially given the impending announcement at that fruit company coming in a couple of days. I know you have your nose buried deep in your Excel spreadsheets and your charts and your graphs, planning the ultimate strategery for that announcement.
Strategery is being planned.
All right. Speaking of strategery, we are also joined by the man beaming to us from the great state of Maine by way of Brooklyn today, none other than Mr. Andrew the Rock Lobster Giovinazzi from OptionPit.com. Mr. Lobster, welcome back to the show, sir.
Yo, it's good to be here.
Jeez. Listeners, he was singing before the show started, so thankfully we've dissuaded him of that on the show to save your delicate ears. Well, I can't guarantee he won't break into song again sometime during the show.
Hopefully not. My voice isn't as good as Sebastian's, but it is a sunny day in Maine, and spring is sprunging, and all those lovely things are happening. The market didn't implode today, so what the heck?
All right, and last but certainly not least, we are also joined by the Viceroy himself, good old Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Good to be here, Mark. A very busy day at OX today.
And with the gang all assembled, it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show where we break down what was moving, What was trading, what was lighting up the old tape today was another up day on the street. We've had a few series of rallies here on the street. I guess the worst is over, and now we're back in rally mode. Most of the major indices closing up about fractionally on the day, a little bit better in some cases. S&P closing up nearly half a percentage point, or about 7 handles to 1871. The Dow, a bit of a laggard, only up about 0.3 of a percentage point, or 40 handles to 16,449. The Qs leading the charge, up about nearly 0.75 of a percentage point on the day. And of course, not surprisingly, coming out of the weekend and coming out of a bit of a rally, VIX cash selling off a bit. Mr. G, Mr. Giovinazzi, what caught your eye, if anything, in the strong rally we saw in the markets today, or at least partial rally?
You could have said like possible nor'easter coming or storm, but yeah, no real storm. Volatility down. So today, the market opened, about flattish, up small. But we had actually the first full weekend print of VIX higher today that I can remember. VIX was trading almost like 14 this morning, and pretty much spent most of the day just giving it all back. And actually, with volatility coming down about 1 point across the board, so not a lot of. It's the market has been like feast or famine. The volatility has gone up so fast, and the movement has been so fast when it moves. And then, just like, a tempest in a teapot kind of thing, it just disappears. Volatility in the vol products, not, at 52-week lows, but getting back there already. So at least people are don't seem to be too worried. The Russians kind of got some other sort of appeasement type deal. I'm not quite sure what happened with Ukraine, but, the RSX, the Russian index, marched up from like 22.5 to 24 and change on Friday. Gave some of that back today, but it seems like that risk premium kind of went away. The only thing I would say is that all those kind of high-flying momentum stocks, they bounced a little today, but for the most part, they're kind of duddy, not really regaining those lofty purchase. But it feels like the vol is going to keep sagging. And maybe this finally, 4 months later, when Alex and I predicted we would see some kind of, 11-handle VIX or something like that. All these little issues we had that got in the way of our eventual prediction being right. But it's what it's feeling like. It's kind of getting set up for a bit of a sag in vol. So, but that's usually means, we kind of rally and sort of kick around. Don't do very much, but, probably good for people that like to sell options.
All right, thank you for that, Mr. G, as always. And of course, we are right now in the teeth of earnings season. It was H Day before the bell, it seemed like today, with Haliburton and Hasbro both reporting before the open. Haliburton, of course, of Dick Cheney fame, amongst other things, closing today up about $2 or 3.3%, looks like the numbers. And the street smiling on them. The same to be said for Hasbro, those toy makers, up about $1 and change at the end of the day today. So good earnings coming out of the H names. And of course, the name a lot of you guys are waiting for, including for us here on the panel. We've talked about it many times on the program, and we're going to talk about it again today. None other than good old Netflix itself. Earnings coming out after the bell. It's like the number is out right now. Netflix closing today, $348 and about 50 cents, up about $3 or so on the day, nearly a full percentage point. This is obviously a heavy day given earnings, but not perhaps as heavy as you might think. Usually you see 2, 3, maybe 4x ADV on a day like this. Only seeing not even 2x ADV on the day. Netflix averaging about 80,000 contracts, doing about $1.50 today, and not super sentiment heavy in one way or the other. Seeing people pretty much calls and puts about equal 1.2 to 1. Net delta is not really that heavy on the day either, so it wasn't like people were loading up on puts or loading up on calls. That at the money straddle, of course, going out around $38 to $40, depending on where you're looking. Of course, looks like the number coming out right now, and it's up about $20, trading $368 in the after hours. So far, at least in the initial blush here, premium buyer is not looking too good. I also like to see what the crazies are up to on days like today, and certainly in a name like Netflix, we have our share of the crazies. Scrolling down the old strike chain here, we see some people out in force, nearly 1,000 of the April 235s. These are well over 100 handles out of the money. April 235 puts, nearly 1,000 of those going up today on a relatively mixed volume. So there were a fair number of buyers out there on pretty much new opening interest. We also saw the April 245 puts. Again, those are about exactly 100 handles out of the money. So we like to see how people like to line up with these even handle type trades, and 100 handles out of the money is where the action was. Nearly 1,200 of those puts going up today. Again, with a strong amount of buying out there, going out at about nearly a dime or so on those puts. And to the upside, we also saw the April 430 calls lighten up as well, with about 1,000 contracts going up. Again, a lot of buying sentiment on those as well. Nearly 100 handles out of the money to the upside, about 80 or so. Again, no appreciable open interest on any of these strikes. This is all open in paper here, and so far at least, all the crazies seem to be losing on this end of the equation, as we're only up about 20 or so handles still in the after hours. Uncle Mike, I know you're not a big watcher of high flyers like Netflix, but what else caught your eye in today's activity?
Okay, a couple things that I was watching today. Over the weekend, I stayed just long premium on gold, just as a kind of a precautionary method. Gold went down a little bit. We were able to sell another put spread on that in efforts of financing a September long put. Also, I had a few clients in an SLV 119 put. They were short the 119 puts, trying to get long SLV going into the weekend, and it was at 1885, and going into a 3-day weekend, made the decision to just get out of it and regroup for Monday, just in case of some type of a weekend gap down of some sort. It worked out okay. We ended up saving about 20 cents getting into the long SLV today. Once again, that's with a pretty small position, but nonetheless, we were able to do it. I think that right now, we're at a stage overall to where, with the VIX coming down like it is, I'm starting to get into more of a calendar spread frame of mind again, as opposed to a vertical spread frame of mind, just because with volatility in general, it's around the lower levels. Now, with that being said, does that mean that it can't go lower? Well, of course not. If Andrew and Alex are right with this 11 VIX, then obviously vol will go lower. But one thing that I would say to a lot of listeners out there is I think now, with vol coming down like it has, it might be time to start considering more calendar spread type things as opposed to the verticals.
Interesting. And are you leaning long the calendar?
Kind of long the calendars at this point. So, for example, with my SPY diagonal, one thing that we're doing this week, let's say if we had higher vol, what I would be doing this week would be either selling a bull put spread or selling a bear call spread as a way of financing our long call that we have. This week, what I ended up doing, just after looking at several different months, weeks, and that type of thing, is I ended up selling a 188 call, and then buying a 190, and that's for the front week, and then buying a May 190 call as a way of kind of financing it, so to speak. Now, with that, we end up paying a 40-cent debit for it, but by doing that, with the differences in the option prices, number one, if SPY does go through the roof and goes up to 220 next week, well, we only have $2 of risk, so to speak, because of the fact that we have the upside protected. But number two, what that does is it gives us the ability to have a little bit of premium on it. It's not a very large position if you're looking at the Greeks of it, but what it does do is it does give us the ability to neutralize the theta on the long call for June. At the same time, give us the ability to where, if the market does melt down over the course of the next couple of weeks, let's say that non-farm payrolls in a couple of weeks aren't good. Let's say that these earnings announcements coming up are not good, and the market takes a dive to the downside. It's not going to be that much risk to us because of the fact that we only have 40 cents of downside risk. And I think that in this type of market environment, that's the more prudent way of playing things.
Good stuff. Uncle Mike, a little bit of a preview of the strategy blog here in the trading blog. Good stuff. I like it. And of course, last but certainly not least, beaming in from behind the solid and super secure OX by Charles Schwab firewall, Mr. Viceroy, what caught your eye? I'm going to go out on a limb and say Facebook and Apple, because they're coming down the pike, we're probably lighting up your tape. Did you also see some Netflix people floating in there?
When I spoke to the desk, we talked about all those names, and they thought our Netflix volume was surprisingly light today. What they did have, interesting trade we did a little of today. I know a trade did a lot more than what we did here, but they had a lot of long paper in Facebook, a lot of put paper in Facebook going out into the leaps, interestingly enough. We always have a percentage of what you categorized as the crazies, the people buying the $100, $150 out. We always get a lot of that. Another interesting comment that came up from the desk today, our VIX volume was light. Surprisingly, we do a pretty significant amount of our volume in VIX options. It's normally in the top 3 or 4 here, and our VIX volume just went dry today. So I don't know if that's an indicator of folks not seeing risk in the broad market, but it was just curious to see how little VIX we did today. It was literally like, something had happened today that lightened the volume.
That seemed to be my own anecdotal take as well. Not so much in the VIX, but like I mentioned at the top of the show, Netflix seemed just light in general. So I'm not surprised that you guys at OX had a pretty much lighter share there as well. And I'm parsing through the Facebook volume, and it seemed like you're right. There was a lot of activity in the Jan 2016s today, a serious amount. 2,000 of the Jan 60s, those are, of course, at the money, but all the way up the chain, all the way up to the Jan 140s, a 60 lot of the Jan 2016 140s trade. So that would certainly qualify in my book as the crazies. But yeah, they traded pretty much every strike all the way up from 60 up to 140 with a few gaps in between. So for some reason, really long-term Facebook lighten up the chart here today, which is a bizarre development in and of itself, and one that's probably worthy of note, and we'll parse that a little bit more in the Express block and as we get a little closer to FB earnings as well. But now it is time to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we break down the weird, the interesting, the unusual, the downright bizarre activity that was lighting up the old tape. We're going to start off with SBAC. No, not the Small Business Advocacy Council. This is SBA Communications Corporation, up about 75 cents or so on the day. This is a name that does, about 800 contracts a day, doing about 10x that, 8,000 contracts today, and pretty much the lion's share, about 8,000 of those contracts going up in the May 85 puts. In particular, we highlighted on the site this morning that we saw some blocks of about 1,000 lots going up in these May 85 puts for prices around 25 cents. These are sales here, all opening sales because only 80 contracts open on this strike. Total on the day, like I said, a lot of people piling in to this strike. They went out 25 bid for more on these things, so people wanting more of these, even though sellers keep diving into them, which is kind of interesting. This could be someone just drawing a line in the stand, wanting to get long here at 85. The size of these, even though with scattered blocks, the size of these makes me think this is probably not your average newsletter type trade where you see like 10 lots and 25 lots flickering in. But what's your take here, Andrew? You think this is someone just drawing the line at 85?
Yeah, a lot of scattered paper. Lots of volume. It started off selling this morning, and then they came in and scooped all the volume up. So, it might have been a newsletter seller at the beginning, but I'm looking at this stock. It doesn't have any it hasn't made any real dollars in a couple years. I know that fundamental analysis thing is always tough. Then somebody's coming in here and selling these puts for a quarter into earnings. Sure, this trade could be correct, but I just see this as kind of the old thing where you're trying to pick up nickels in front of the bus. That's what this trade feels like to me.
Does have a bit of an air of that about it. You're right.
And actually the vol was down when I posted this. So, Clearly there was a seller of these. The stock is not very volatile, but it's just not a trade. The only thing you'd have to want the stock at 85, it was 50 a year ago or $55 a year ago. This one is a head scratcher for me. I guess it is a way to make 25 bucks, but it's not, it wouldn't be one that I would want to make 25 bucks on.
It is not often you see someone blasting out size like this on one strike in a name that does no appreciable volume, and these puts are bid for more coming out on a day when the thing's up nearly $1. You don't see that very often.
You don't. This is just a very odd trade. Almost makes me want to go buy like the June 85 puts for $1 and sell these for $0.25.
This makes me think that this guy, whoever he was executing through, started shopping this around, and he hit on somebody who said, hey, I like the other side of that. I want more. And now he's sitting there at $0.25 bid for all he can get. Hey, that's why it's the odd block, right?
It is. I thought it was a very odd, let's just call it an odd trade.
Maybe this guy awakened a sleeping lion and he's bid for 100,000 of these coming out at $0.25.
It was a real, again, all the power started on the sell side, and all of a sudden there was a bid, didn't go away.
That's a weird one. That's an interesting one.
Yeah, and I was thinking about trying to work a time spread, get to the 85 strike, or something, a little lower, but it would be speculative, but I don't think there's a whole just kind of follow along with a guy that's just 25-cent bid for all these guys want to sell. So we'll see. We will see, although there's not a lot of real liquidity out there. So this is one mostly I'll just sit back, and while I am tempted, I most likely will just watch.
It is, yeah, right. It is kind of tempting to want to lean on that bid because it's so weird. But on the other hand, you don't know how many are sitting there. So. But nonetheless, one worthy of note, we'll put it in our to be reviewed down the road column while we move on to our next name here in the odd block. This is SMH, the market Vectors Semiconductor ETF, closing today $45.35, pretty much up about a quarter or so on the day. Name that does decent volume for the odd block, at least about 2,700 contracts, doing nearly 20,000 today. So some decent paper, and pretty much the bulk of that on not the put side, but the call side. Going on out to August, we saw the AUG 50s lighten up the tape 14,538 times for prices around 38 cents. Again, this is a buy. Of course, there is a sizable amount of open interest here, 22,000 and change. So this could be a short covering, but again, not exactly the most sensible short covering here, but unless this guy knows something that we don't. So you think this is more piling on here?
Yeah, why, if you're doing if clearly they didn't go to the Tucson school of writing calls, right? To buy back your 47s here, buy back the 50s here, because the paper, it looked very much buying. They were lifting the offers, vols up a little bit.
While you say that, I neglected to mention there are also about 5,000 of the AUG 47s being bought today as well, against about 11,000 open interest. So two very odd, yet another odd example of odd trades going up here on the odd block.
So that's why I'm thinking they could actually be just piling on for more. I want to see tomorrow. But the semiconductors, it's one of my little closet longs anyway. I'm on a couple of the semi stocks. Mostly just from the dumb play sector rotation. Everybody gets out of the momentum stocks and then looks at all these little cheapy semiconductors and buys them up. So it's been happening to a small degree, not a large degree yet. But yeah, the semis they've had a good run. So it's just, again, another head scratcher on why somebody would want to close these and not let it at least run to the strike a little bit. But just seems like a very early close to me, unless they had stock and they're just getting out of the whole banana. Just, we're done. And, we're taking maybe what was a good buy right and closing it down, because there was enough size for that. But
yeah, it was about 11,000 open on the 47s, 22,000 open on the 50s. That tends to indicate perhaps a 1x2 lurking out there, particularly in a name that isn't that active. Also 15,000 of the AUG 38 puts. I'm guessing if we went back and dug into the open interest a little bit, we'd see that someone put on a 1x2 and then financed it with those AUG 38 puts. So he probably collected on that trade.
Oh yeah, but it's weird because the volume's not panning out, as far as how it lines up with the way it got closed. That was kind of the the odd and the odd block part for this one. So
yeah, taking it off, the unwinding is definitely the odd portion here because it doesn't really make a whole heck of a lot of sense. Either way you look at it.
Yeah, but they clearly, if they were long and they had the 1x2 on and sold the puts, they made money, but it was just buying. It looked like just buy to close. So
I think he was just diving into a two-saw stupid. That's what I think. When in doubt, go long the stupid.
Trade it up.
All right, next up, we're actually going to dive a little bit back into the old rearview mirror, look at some names we profiled earlier here on the Odd Block and see how those trades panned out. Starting off with a trade we profiled back on March 27th. These were some calls going up in ARCC. This is Ares Capital Corporation. In particular, we profiled someone picking up quite a few, over 5,000 by the time it was all said and done, of the April 18 calls for a dime. This was all opening paper at the time, pretty much negligible open interest. Fast forward to, of course, April expiration, and this one pretty much was a loser. The stock flirted briefly with about 1770 not too long after this trade went up, so the guy maybe could have scratched him if he was pretty quick, but I didn't see much evidence of that. Looks like this guy pretty much just threw 50 grand down the drain on a quick flyer, and it went in his face. Is that your take as well, Senior Lobster?
It looks like it looked good for a while, and then it did not. So yes, it does feel like a bit of a flush, as in down the toilet type flush.
Yeah, we like to check in on these every now and then, listeners, because it's easy with all the upside call profiling that we do here to say, oh, there's some smart money going on here, and these guys really know something, when quite often that is not the case. But that may not be the case here for our next name. In particular, these guys were clearly on the right side of the fence, which makes the whole thing even more of a head scratcher. This was a trade we profiled back on March 24th. These were call buyers in DGX. That is, of course, Quest Diagnostics, ticker symbol DGX. So what we saw in this name was, of course, someone picking up about 9,000 of these contracts net back on March 24th. Outlaying about $180,000 or so on this trade. And then it looks like it was going his way pretty well, actually. In fact, the stock gapped up to over $60 shortly after he bought these calls. In fact, we even talked about him again on the show on a later date, saying, wow, this guy really was in the right. So this guy had many opportunities to get out of this trade for a substantial amount of money. In fact, these calls traded as high as $1.25 back on March 26th. So he could have easily got a 600% profit if he had just jumped on them there, but for whatever reason he didn't. He sold about 2,700 of them on that same day for about 50 cents though, so still substantially less, collecting about $130,000, so still leaving about $50,000 or so on the table from that trade. But of course he had almost 7,000 contracts still open on that strike. And unfortunately, he let the rest of them pretty much just waste away and go to zero, even though he was sitting on a substantial amount of money. He was sitting on nearly $1 million left just on the open interest he still had sitting on those calls if he decided to sell them out. But for whatever reason, he let that go to the wind. He trickled a few thousand out on expiration Friday for a dime, but those are already losers. So essentially, this was a story of missed opportunity. He probably put these on, looks like as a flyer, maybe as a hedge against a short stock position. That certainly could be the case, in which case he is not too upset by this. But still, this is a story that shows that even if you're using this as a hedge, you should manage the hedge portion much more actively, much better than this, because he had an opportunity to really take a lot of money off the table, and he didn't. He let it slip through his fingers. I guess you can call this the bonanza that wasn't.
That's like not even a good episode of Bonanza. It's just a sad, it looked like a sad, you know, you see a lot though, what I tell clients with that, if you're going to trade short-term options, you got to take profits. Because that option on expiration day doesn't perform very well, even if you're about 25 cents below the strike. It really needed to move. And from what I can tell, you know, like you said, had opportunity, and you know, looks like there was, at least I saw open interest. There was open interest of 7,500 on Thursday. So, you know, there still was a sizable amount, it looks like, that got left out there.
Yeah, this whole thing just makes me sad. I started profiling it, and I just assumed that this guy took it off for a big winner. And yet the more I started digging, the more disturbed I got that this guy actually left a lot of it on the table, which is just sad business all around. So there you go, listeners. Again, yet more proof that the size money is not the smart money. Even if this guy had a huge hedge on against some other position and that other position worked in his favor and he's happy about it, he still could have been and should have been much more proactive on the hedge part of his equation to take some profits here. So interesting stuff. Again, we don't just highlight the stuff that's going on right now. We go back and check up on these names that we highlight, and these were two very interesting ones. But now it's time to close out of the old odd block and roll right on into our next segment, the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. This is, of course, the portion of the show where the Viceroy dons his fanciest of fancy caps and proceeds to take us behind the scenes into the land known as OX by Charles Schwab. Mr. Viceroy, you said you saw some crazies out there in Facebook. You saw lighter volume than expected in Netflix, and of course, everyone and their mother positioning ahead of the big announcement in Apple. What else did you see out there in the land known as OX?
Yeah, when I queried the desk as to what they had seen today, clearly Apple and Facebook were the dominant traders today, but the desk said that trading was active today just across the board. But the one thing they pointed out were the lighter than expected standouts today. And as we mentioned earlier, their VIX volume was a fraction of what it normally is. And they didn't see a lot of Netflix today. And, I listen to what the desk says and I say to myself, so what does that tell me from a macro issue? The first thing I always ask myself is the stupid question, is it a national holiday somewhere else? And is that the reason for lighter trading? Because a lot of our VIX comes out of Singapore and Australia and Europe. And it just seems today was a light day in VIX options. But Facebook and Apple made up for it. The other area that was active today with Haliburton earnings is that gave trade lift to the Schlumbergers, the Bakers, but it also gave trade lift to all the big oil companies were active today. And we saw a couple of them trade through thresholds, which always leads to the options activity. That's, the Exxon going through 100, the Schlumberger going through 100, and you start to see our client base start to play in some of the out of the money premium. But that was the trading day today.
All right. Thank you for that, Mr. Viceroy. You may now remove your hat, at least until the end of the program, while we keep on rolling right on into our next segment, the Strategy Block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, you know what time it is. It is time for Uncle Mike to don his fancy garb, including his fancy smoking jacket, grab those stone tablets that are hanging on the wall, and head on down to dispense some options wit and or wisdom, his choice, dealer's choice, if you will. So, Uncle Mike, which is it today, wit or wisdom?
Actually, I do. I have a joke I can open up with if we want to go with a little bit of wit, if we really need the wit.
Go for it. Let's see.
All right. So a man was talking to God, and he says to God, so God, is it true that to you $1 million is like a penny because you're God? And God says, yes, absolutely. And then he says to him, so God, is it also true that one day is like 1,000,000 years to you because you're God and you're everlasting to everlasting? He said, yes, it's true. So the man says to God, okay, well, can I have $1 million then? And then God says, sure, just wait a day. Boom, punch.
I like it. Good wit to start us off, sir.
Okay, very good. All right, so today I want to go over expiration day risk. I know last week we had an expiration Thursday, and so maybe some of you out there got burned on that. Who knows? But while it's fresh in our minds that we're just coming off of expiration, I do want to go over some of the ways with which I try to play expiration and some of my views and why I think it's important to go about doing this in a certain way. So to start with, let's talk about an AM settled option. And let's say that you're trading, we'll just use the Russell 2000 as an example, or you can do this with the SPX or anything that is AM settled. What that means is that the last trading day for that option is on Thursday. It's not on Friday. And you have something called settlement. And it's not the open price with which you see when the market opens on Friday morning, like on CNBC in your Options Express account or whatever the case may be. It's actually what the real open is, so to speak, meaning that every individual stock doesn't open right at 9:30 Eastern time. So there's not a true open when you're seeing it because some of the stocks don't trade right there and then at the open. So what all of the powers that be do throughout the day is they calculate what each individual, the first print of each individual stock is throughout the day. And that's how they determine what the real open is. And that's released later in the day. And some of the indexes, oftentimes it's not even released till after the close. You might not even see it. So, for example, I know the Russell 2000 is one that typically you don't see what the settlement price is until the end of even after trading is done for the day on Friday. So with that being said, if you're in a position on Thursday night, you're at the mercy of what that number actually is. Now, is that number manipulated? Is that number, those evil market makers, are they looking to screw you over? Well, that's a topic for another day. Either way, my point is that it's legitimate from the standpoint that you are getting an actual specific number, but what makes it difficult is that you're not in control from the close of trading on Thursday until ever, for that matter. So let's say that you're short an option going into settlement, and if that's the case and the settlement number is in the money, well, that money is just going to be taken from your account. It doesn't get to come back. If you're short an option going into just another trading day and it's not even expiration, you have the ability to make an adjustment. You have the ability to get out of the trade, whatever you're looking to do. So me personally, very, very seldom will I go into settlement. The only time that I ever would is, as an example, let's say I was long a call and I was short a call spread. And I had the sentiment that no matter what, even if the market opened way up, I'm fine taking on that settlement risk, because if it goes up that high, I'm totally fine with it. And if it goes way down, well, I'm not planning on trading on Friday anyway for whatever reason, then it wouldn't matter to me. To give you an idea of that, I do that maybe once a year, and a lot of different stars have to line up for me to even consider doing that. The reason is that I don't like being out of control of my trades. If I'm going to have a losing trade, I'm fine with that. Don't get me wrong, I hate losing trades like anybody else, but I at least want to have the control to get out of the trade on my terms to an extent. Meaning that I don't want to have to wait all day, not have margin available because it's still tied up during the day because of the fact that the settlement number isn't known yet, so the brokerage isn't able to release margin to you. Although some have in the past, but that's another story. But on there, I like to be in control. Now, the other thing with which I want to talk to you about is, let's say that you're just doing a stock option and XYZ stock is at $50. And you're thinking that, oh, okay, it's Friday afternoon and I'm short the 40-45 bull put spread and it closed at $50. Oh, I'm safe. I'm in good shape. So I can just let it expire worthless and look for the coveted clean screen come Sunday night in my Options Express account. Not so fast, folks. After the close, let's say that XYZ stock all of a sudden says that we have some bad news, this, and this happened. And then all of a sudden XYZ stock in post-market trading goes down to, say, $44 per share. Okay, well, guess what? You're going to get put that stock. You own the stock at $44 a share, whether you have the margin to do so or not. Come Monday, you own the stock at $44 a share. And you're thinking, oh, okay, well, I got that 40 put to protect me because after all, it's a spread and it's a limited risk trade. Not so fast. That 40 put already expired worthless and you are not protected. So let's say that on Sunday night, XYZ stock says, you know what, we just told you a little bit of bad news on Friday, but in reality, we got a lot of problems. We're probably going to go bankrupt. And now all of a sudden, that stock goes down to a penny a share. Well, you're thinking, okay, that one lot spread, I'll risk $500 on it because that's the difference between strike prices. Well, guess what? On a $500 risk, you just lost $5,000 because of the fact that the stock went under, it lost everything, and you didn't have it protected. Now, I know I'm being a little bit extreme on this, but this is something that's very real, folks. You need to have an understanding of that because if you go into the weekend and you're not aware of what the risks are, then you could get a very unpleasant phone call. I know we've talked about this on the show before, but I think it's good to hear again because of the fact that it only takes one trade like this to ruin a career, to ruin your trading for life, or to just bankrupt all of your funding for that matter. And can this happen once in a lifetime? Yes, it can. And is this something that you need to be aware of? Yes, it is. Now, I know that if I'm going to drive to the grocery store in a couple hours after the show, whatever, it's pretty likely I'm not going to get into an accident. However, I will wear a seatbelt. I've been a big seatbelt advocate since about 15 years ago. A seatbelt saved my life in a head-on collision. I believe in seatbelts. I think that it's very smart to do. Now, in reality, I get it. It's probably a waste of time for me to use that energy to put that belt across my lap because in reality, what are the odds of me getting in an accident between here and the grocery store? Not that much. I want you to have that mentality when closing out spreads. If you feel that you want to let that spread go into expiration, that's fine, but understand that the worst could happen. And are you prepared for that bad thing happening with which I discussed? And if you're not, then you're driving without a seatbelt. And that's all I have for today.
All right, sir. Laden with quality analogies as always. And now it's time for us to roll on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block, and there's certainly a heck of a lot to parse on today's edition of Around the Block because it is indeed the teeth of earnings season. Let's check in one last time here with the old Widowmaker before we talk about what's coming up, or what's coming down the pike, I should say. So Netflix, as we speak, trading still around about $21 north here on the day, so still not seeing that massive surge that the options were predicting, but we have a little bit of time to go. And of course, there are a number of other big names coming out this week. Of course, Apple on the 23rd, Facebook on the 23rd as well, Ford on the 25th, GM on the 24th before the open, Microsoft on the 24th as well, United Airlines on the 24th, and indeed Amazon on the 24th. So that's just a few of the names that are coming out, but probably a lot of the big ticket ones that you guys are really paying attention to for the rest of the week. Starting off with you, Uncle Mike Tusaw, let me just hazard a guess as to which one is taking up the bulk of your time. I'm going to go out on a limb and say United Airlines.
You got me. I'm actually doing a pairs trade with United Airlines and Home Depot. I think that the price of home improvement and airlines, there's a correlation.
I like it. That could be a whole other show.
Yeah, so now that I don't get struck by lightning here in the next couple of minutes, just getting geared up for Apple right now. I'm long my long-term put and long the stock at this point, and curious to see what happens over the course of the next couple of days. I was hoping to give you an update of what I'd be doing going into the show today, but the darn thing keeps going up. So I will have a full report come later in the week as to what I ended up doing and why I did it and when I did it and how I did it.
We will wait with bated breath, sir. All right, and Mr. Viceroy, what are you watching for the rest of this week, sir?
The only thing I'd add to the list is the 10-year. There's a story going around the hedge fund community in New York, a lot of the people I used to call on, that the primary dealers were all shorting, which I think half the world was doing, expecting higher rates, and got beat up a little bit when the rates didn't move. In fact, when the rates moved lower, and a short squeeze in the 10-year, which is kind of interesting because obviously it's so liquid, it would take enormous positions. But watching that rate, and as you pointed out, Apple and Facebook, that was all the positioning today. Tesla has come back on the screen. It's back up over 200. And again, a lot of that stuff, when it trades around a whole number or trades through a whole number, we see a flurry of activity. So that's what I'm keeping an eye on.
And last but not least, Mr. Lobster, what is catching your eye for the week to come?
Oh, this, that, and the other thing. Mostly, I'm trying to get a sense of the earnings. It seems like everything's kind of a sort of a, you would say a meh. You do that with your mouth. Anyway, earnings look like a mixed bag, and they're not really pushing the market to higher levels. I mean, we're back toward the kind of the, not the all-time highs. We're not crossed 1900 again yet, but we're obviously back up there. It feels like the earnings are kind of a mixed bag so far. I mean, usually when you're about, the first 2 weeks in the earnings season, you sort of see the trend, the writing on the wall, so to speak. So I don't think a lot's going to happen. I think that's why the volatility is starting to dip early into the cycle instead of later into the earnings cycle. So, I'm keeping an eye on that. Again, keeping an eye on the world, again, emerging markets, as they kind of sort of pop their way back out again, looking at highs of the year for some of those things. So, I mean, those are the big things. It's kind of like becoming more like a premium selling type universe right now. It feels like time spreads and things like that. Buying premium is more fun because you watch it and it changes value real fast. You're like, woo-wee, I'm winning. When you sell premium, you're like, okay, there's another day I made $4. Another day I made another $4. So there's what type of trades, I guess the thing is kind of shift gears into a lower vol environment. So I think that's what we got, or feels like that's what we're getting to. And, and that's what I'm watching.
We both know the real thing that you're watching the rest of this week. You're still trying to figure out if you should lean on that quarter bid in the SBAC puts. That's what you're really watching.
I am going to look at that one. I'm still trying to figure out why that's a $90. I guess they've got a lot of assets in that company, but when does it start making money?
All right, that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. But before we go, let's check in with each of my cohorts here, my partners in crime on the old All-Star panel, see what they have cooking around. Who knows? It might even interest you, the listener. Starting off with you, Uncle Mike, what's cooking?
Tuesday, the 22nd, we are discussing the Iron Condor versus the Iron Butterfly. Depending on what time of day you are listening to this show, it is not too late to sign up. www.rcmassetmanagement.com/webinar.
Good stuff. And speaking of webinars, Mr. Viceroy, what kind of webinars do you have coming down the pike over there at OX by Charles Schwab?
So I'll just showcase a couple. These are Wednesday, the 23rd. Introduction to Trading Futures with Mike Zaremski, who runs our futures desk. Risk gauges, Nina's going to talk about Delta and how you use it to set expectations. And then Nina's going to do a tech lab after that with the introduction into streaming charts. 2 live events this Saturday, the 26th. Jim Ruzan and the crew will be out in Schaumburg at the Convention Center in Schaumburg doing their 9 to 3 sort of, we call it an all day, but it's 3/4 of a day. And then May 10th, New York, Midtown. All the events are free. Just come to optionsexpress.com. If you can't make a live event, they're simulcast on the site. So you can be home with the dog and hot chocolate and get full participation.
And Mr. Rock Lobster, what's coming down the pike in the land known as the Pit?
Actually, we don't have anything.
Oh, well, there you go.
Just kidding. No, we do. On May 7th, why you need to take our gold class. It'll be a free webinar. You're going to learn stuff. You're going to learn stuff about trading. You're going to learn stuff about risk management, learn about investing with options. But obviously, since our gold class is much more in depth and it's about a 3-month-long class with all of the materials all in, we figured it was good for people to actually learn why you might need to take it, especially if you want to trade options, invest with options, do just about anything with options. So that will be on May 5th. Look for the upcoming note coming out very soon.
All right, that is going to do it for the old program. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.